Welcome to Cryptonic Events. We have prepared this week's crypto news for you. Let's start the video now that you subscribe to our channel, like and comment. Presents Cryptonic Events. Best-selling author claims JP Morgan, Federal Reserve and Ethereum colluded to harm XRP. A notable XRP community member and best-selling author allege that the U.S. Federal Reserve, JP Morgan, and Ethereum colluded to harm XRP. Linda Jones, a prominent figure in the XRP community, recently made a series of allegations that have drawn the attention of crypto proponents. This comes shortly after reports uncovered a connection between Ethereum, China, and Prometheum. In a tweet, Jones claimed that pioneers in the crypto industry, including Ethereum founder Vitalik Buterin and individuals associated with Tron, were sent by the Federal Reserve in China when they appeared at Ripple's office as interns and employees. Recall that, in April, Matt Hamilton, a former Ripple director, claimed that Buterin sought an internship role in Ripple, as previously disclosed by the Crypto Basic. Plans to make XRP irrelevant? Jones asserts that the Federal Reserve banks were aware of the capacity of Ripple's technology to establish a fair and equitable environment, thereby posing a threat to their authority and significance within the financial sphere. She alleged that to counteract this threat, they launched Project North Star to build a crypto ecosystem. The approach involved creating a safe harbor where their asset would gain an advantage over XRP by asserting its sufficient decentralization while branding XRP as centralized. It bears mentioning that the recently released Hinman documents reveal a sort of concentration on Ethereum. Industry leaders speculate that Bill Hinman's aim might have been about giving Ethereum a free pass. A JP Morgan paper asserted that the release of Hinman docs was a boost to Ethereum. Jones suggested linking Vitalik Buterin and JP Morgan, the esteemed banking institution. She alleged that Buterin and a consortium of investors raised a significant sum of capital through an initial coin offering, ICO, to launch Ethereum. Jones called attention to a Protos article from March 2022 which detailed that JP Morgan controls and profits from MetaMask and Infura. These two protocols represent Ethereum's fundamental infrastructure. In an intriguing twist, Jones pointed out that while Warren Buffett, JP Morgan's CEO, publicly denounced Bitcoin as a fraud, the same bank secretly developed its cryptocurrency. Notably, JP Morgan launched its digital asset Onyx in 2020. However, Buffett remains one of the most vocal crypto critics. This apparent contradiction, she alleged, was a deliberate attempt to divert attention from their activities and gain an advantage in the crypto market. Jones also pointed out JP Morgan's acquisition of a stake in Consensys, MetaMask, and Infura. She alleged that the bank created Onyx to position it as a competitor to XRP and Ethereum. The U.S. regulatory uncertainty. The lack of comprehensive crypto regulations in the U.S. became another point of contention for Jones. She claimed that Congress and the Securities and Exchange Commission, SEC, deliberately avoided passing laws related to cryptocurrencies. According to her, this regulatory uncertainty is a deliberate attempt to allow Wall Street and banking institutions to manipulate the markets and generate enormous profits through practices like price manipulation and insider trading. Jones alleged that one such manipulation involving Consensys would be exposed by an ongoing audit in Switzerland, which is investigating the illegal transfer of Consensys into Consensys Software Inc. It is important to note that these allegations made by Linda Jones remain speculative at this stage. However, they serve as a reminder of the complex dynamics within the crypto ecosystem and the ongoing debate surrounding regulations and the involvement of traditional financial institutions. Bitcoin's price spike to $31,000 inflicts $90 million loss on short sellers. The crypto market liquidated short and long positions worth over $100 million in the last 24 hours following a brief rise of Bitcoin to $31,000, marking its first such increase this year. Short traders suffered greatly as the BTC price surge of the past week dashed their expectations of further cryptocurrency price declines amid regulatory pressures. Over $140 million liquidated. According to CoinGlass data, out of the $141.71 million liquidated in the past 24 hours, the short positions account for $87.1 million. The largest liquidation occurred on Binance and was valued at $3 million. Bitcoin alone accounted for $55.89 million of the total liquidations. Other cryptocurrencies such as Ethereum, Bitcoin Cash, Pepe, and Litecoin also recorded a sizable amount of losses for investors trading them. While shorts constituted most of the liquidated positions, long positions were also substantially liquidated. Crypto assets like SOL, XRP, CFX, and Doge witnessed a higher number of liquidated long positions. This suggests that some traders overshot their projections of a future rise in price for these assets. Bitcoin ETF applications. Over the past week, the crypto market has witnessed a new wave of institutional interest in Bitcoin. Several traditional financial institutions have filed applications for a spot BTC ETF. BlackRock's June 15 filing triggered an avalanche of applications by other rival firms. BlackRock is the world's largest asset manager, with more than $10 trillion worth of assets under its management. Since then, other asset management firms like Invesco and WisdomTree have submitted new BTC ETF filings to the U.S. Securities and Exchange Commission, SEC. Additionally, a crypto exchange backed by several traditional institutions like Fidelity and Citadel Securities went live on June 20. BTC monthly volume above yearly average. Meanwhile, the renewed bullishness surrounding the market has translated into Bitcoin monthly transfer volume overtaking the yearly averaged baseline for the first time since the Luna implosion, according to Glassnode data. The blockchain analytical firm added that this suggests an expansion in on-chain activity, typical of improving network fundamentals and growing network utilization. Disclaimer: the opinion expressed in this video is not investment advice. Every investment is risky. We do not recommend investing with money you cannot afford to lose. Thank you for watching today's video on Cryptonic events. We hope you found it informative and engaging. If you have any questions or comments, feel free to leave them in the comments section below. We always appreciate your feedback and will do our best to respond to as many comments as we can. Don't forget to subscribe to our channel and hit the notification bell to stay up to date on our latest content. And if you enjoyed today's video, please give it a thumbs up and share it with your friends and family who might be interested in the exciting world of cryptocurrencies. As always, we'll continue to bring you the most relevant and reliable information on the crypto market. We're excited to have you as part of our community, and we look forward to seeing you in our next video. Thank you again for watching and have a great day.